Hello traders, my name is Gregor Holat and welcome to a new free video in which I want to update you on dollar CAD. I shared this bearish view of dollar CAD 10 days back or so. I mentioned that we could continue lower after 3 waves down. Actually, this was shared also on Twitter ahead of employment data from released from US and Canada. But real moves, real weakness on dollar CAD was actually seen from yesterday after some hawkish comments from Bank of Canada. So it appears that we are in a new aggressive sell-off here. Actually, we were and we are still short with members. Actually, we were looking for decline down from a wave 4. As you can see, market is progressing very nicely. Actually, we played here with 2 entries. Actually, I like to split entries and make a larger size, so larger stop size, so that market has room to breathe. So actually, we are anticipating, as I said, more weakness because here we can see now 5 waves of decline from May highs. And on a daily chart, I think that this is really structure that matters a lot. We have seen an ABC correction. It's a 7 leg recovery against the previous 5 wave decline. So you know that this upward momentum, despite higher prices, was not that strong. Previous bearish leg and momentum within this decline was much stronger. Very strong move in a very short period of time, while here bulls were struggling. Okay, so it appears that we could see a break to the downside now. Price is now at much lower levels, and actually I shared this as one of my favorite clear setup charts for 2017. That's the chart from January 03rd. Actually, we were looking for this ABCX ABC recovery. We hit 61.8% retracement, and now we are turning down. Also, here on the right, you can see potential bearish head and shoulders pattern. So everything so far is playing out very nicely. If we take a look on updated charts here, here's this updated daily chart where I said 5 waves down, and then ABC correction can be finished because we are already now at this trend line potential support. But the most important is that we have 5 waves of decline. Okay, there's definitely another scenario that we are going much lower from here, so it can be wave 3, not wave 5 of a first 5 wave movement. But still, there is a good chance that dollar CAD will stay in bearish mode. Also, crude oil is still searching for support, so imagine what will happen with dollar CAD if crude oil will bounce, which I believe it will happen in the near future. So actually, my first count, primary count, was looking for shorts here for a wave 5. And it appears that we will continue even lower. We are, however, for now, some supports here, but I think that any bounce should be only wave 4 within wave 5, or maybe even wave 4 within this wave 3, because this decline, okay, this current leg is very strong to the downside. I definitely must consider potential scenario that we are in wave 3 of a larger degree and not wave 5. So actually that's the reason why I always try to trade without targets. Okay, what I love about trading is that be open-minded, always expect and be aware that market can surprise you and that moves can be huge. Okay, so despite the fact that my original trade plan that I was looking for wave 5 to the downside, which means that I should be booking profits here, or maybe even 100 pips higher, there's always a chance that market will make some different patterns. Okay, Elliott waves is based on the probabilities. There's nothing 100% on the market. So despite my prediction that we are going lower into wave 5, it can be the case that we are falling into wave 3. But the real power of the Elliott wave technique is that despite 2 different wave counts, in both cases there is room to make money. So actually we are now aggressively, as I said, trading lower, and ideally based on personality we are in a wave 3, which means that there is definitely room for much lower levels, which means more gains on the short side. Okay, so that's why I love trading stops. Okay, so keep an eye for potential more weakness. In validation level is currently at 1.3420. Now that's based on Elliott wave rules, but definitely if you see rise, let's say back above 1.3350, this would probably increase odds that we are already in a larger ABC pullback against this 5-wave decline shown here on the left, which is still my primary count. Okay, but what really matters for the next few sessions is no matter if we are in a wave 5 to the downside or wave 3 here, in both cases, okay, we need wave 4 and then a wave 5 decline. Wave 4, then wave 5 decline. Okay, so I will stay bearish here on dollar CAD, expecting more downside, and also, as I said, crude oil still expecting a bounce there, so it will be very interesting to see what happens. However, I'm watching dollar index, which somehow is not correlated at the moment with the dollar CAD, but still looking at this potential waves 1, 2, 3, 4, 5 to the upside from recent lows, and now we can be in a counter trend 3-wave decline. Tomorrow is also important Fed meeting, so watch out for a potential move to the upside. However, I will definitely not be chasing this market ahead of the Fed, but if we see a break of 97.32 while market is trading above 96.48 in validation level, then this should really put strong bullish price action in play for dollar indexing. In such case, I would look for possibly for some shorts on euro dollar or maybe on some other euro cross pairs. Now, because of very strong CAD, I definitely will take a close look with our members to euro CAD, okay, because dollar CAD is down and the dollar index will move to the upside, which means that euro should weaken. Okay, so that was for dollar CAD and dollar index. Now the next market that I'm tracking very closely for potential EPO is actually New Zealand against the Japanese yen. Just let me find it, here it is. Because we had a very nice recovery from April lows, but it appears to be a corrective one. It's still not confirmed as a completed correction, but it appears that we can be running here into final stages of wave 5 of C, of a 3-wave recovery. So I'm expecting on reaction probably tomorrow after Fed from this upper channel resistance line. If we'll see a decline in aggressively near, then definitely I will keep an eye on pullbacks. Okay, also keep in mind that the reason why I'm looking for yen crosses to potentially move even lower here, and why I like New Zealand against the Japanese yen, is because Nasdaq and the S&P 500 made a very strong sharp reversal on Friday at the end of the session. So it appears that there can be a new third leg down in play coming this week on stocks, which means that we go probably into a deeper pullback. So in that case, I would anticipate Japanese yen to find some gains. Okay, so this could be play here on New Zealand dollar against the yen, waiting on a 5-wave reversal on the lower time frame charts from this highlighted resistance area. It's very important for me to wait on this and see this 5-wave decline before I may act and go with the bearish flow. Okay, okay traders, thank you very much for your attention, and speak to you in a few days. Bye.